In today's video, I'm going to cover the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. Now, I do post these videos daily, so I highly encourage you to double check the latest video on my channel so that way you get the most up-to-date information. And before I get to the technical analysis portion, I'm going to go over the economic calendar. And for Monday, August 12th, 2024, at 2 p.m., we have monthly U.S. federal budget coming out for the period of July. And one thing to note for next week, we have CPI and PPI inflation numbers that are coming out. So that is important because if the numbers are better than expected, the markets in essence should be moving up. And if they come in worse than expected, the market in essence should move down. But I will say from the past inflation numbers and all that stuff, even if it misses the targets just by a little bit, the markets still don't necessarily react in a negative way. Sometimes they end up going up regardless. So there's that. But I would say if it comes in better than expected, it will fuel the markets, in my opinion, more to the upside. Now, in terms of the markets, yesterday, like I stated, it was pretty much like a coin flip in terms of upside and downside based off the MACD lines since we had nothing scheduled for Friday in terms of economic calendar. And it's almost the same case, and you could see too was prevalent. So for example, we closed the previous trading day right about here. I said it was pretty much a coin toss, and it's literally pretty much a 50-50 split. It went down 50% of the way and then went up 50% away hypothetically. It's within the limits too. And the same thing with the Nasdaq. So this is the S&P 500. The Nasdaq, same thing, showed the exact same thing. And then for the Dow Jones, might have been a little bit different. I'll look at it right now, basically. But in essence, the S&P, Nasdaq, and Dow Jones are still showing a mixed upside downside with the MACD lines. MACD lines indicate if we're in a bearish or bullish movement. And for the most part, the long term, not necessarily long term, because all the markets in the long run end up going up anyway regardless, but more so for the next couple trading weeks, I would say it's kind of showing a downside, a pull down. But in terms of short term, it's constantly mixed between 1 month, 3 months, 6 month, and 1 year charts in terms of downside and upside. So what I'm going to do is I'm going to give the ranges more for the upside and the downside and show, because it's most likely in a way the market's anticipating to wait for the data that's going to be coming out on the Tuesday and Wednesday. Mind you, by the way, I should have clarified. The Tuesday and Wednesday is when the CPI and PPI numbers come out. PPI first for the Tuesday and CPI on the Wednesday. So be mindful of that. So Monday might be just the same thing as we saw today's trading day for Friday, where it was pretty much stagnant for the most part. Yeah, there was range, right? You could see there was somewhat of a range, but it wasn't crazy as like previous trading days where we have massive swings. So it could be the same thing for the Monday leading up to the Tuesday and Wednesday. And what could happen is by the end of the trading day Monday, we could see a market dip potentially, but we could see in the early part of the day an upside and then downside by the end of the day for anticipation of the inflation numbers, right? Now, I'm going to go over the S&P 500 first, looking at SPY, which is an ETF for the S&P 500, so just a different ratio. And I will give the upper limit and then the lower limits and so on and so forth. So basically, we have this downward trend resistance line, and it's pretty much capped at it, which is pretty interesting. And if we were to go to the upside, so mind you, we close at $532.99, and technically it would have to pass the downward trend resistance line. Yeah, we had a massive breakout, so I don't think it would be that difficult. And then the next resistance level I would expect to potentially cause issues is where the moving average is, which is about $535 and some change, pretty much $536 by the way, $536. And then the next level after that is right about here where we set resistance and support level, give or take. It's about $538, $539. But if the market is extremely optimistic, which I don't think is going to happen, then we get to this level where it's massive amount of resistance and support right across it the whole entire time. And you're looking at pretty much $542, $543 and some change, give or take range. Now, I'm not expecting that to happen. I think most likely Monday will be pretty much like not necessarily a flat day, but not much of a range. So again, the higher end, most likely 536, give or take, and some change. And then on the lower end, we're looking at 528 and some change, more so to moving to down to the moving average. So 528 and some change in terms of horizontal support and resistance that I can see, but then the moving average about 526 and some change. Can we go lower? Can we go higher? Of course we can, but that's the ranges most likely I'm expecting. So 536 and some change to 526 and some change. Now, if it starts going down dramatically, then ultimately coming down to this zone right about here where we saw massive drops, 1, 2 touch points, a couple consolidation touch point right about here as well. And that's pretty much around the level of 517, 518 and some change. I'm not expecting anything of this to happen best case scenario, if we were to see the 517, 518 in some change range, it would be for the fact that we drop down early part of the day of Monday to 526 and some change, and then start trickling down to the 522, 523, and then start closing by the end of the trading day 518 and some change, give or take 17, 18, for anticipation for the inflation numbers. But again, because of the MAC lines, it's showing a mixed, which was same thing as the previous trading day, and was pretty much just kind of stagnant in a way for the most part. The range basically from 528 to I think it was 532 and some change, give or take. So not much of a range overall. Mind you, the previous 2 trading days, we pretty much, you could see massive drops. For example, we went from 531 all the way to 515, and then gapped up all the way to the next trading day, all the way to 531 back again. So there's that. Now for QQQ, which is an ETF for Nasdaq, so it's basically same thing, just different ratio, showing the exact same thing. We have the downward trend resistance line as well for the Nasdaq. Yeah, breakout as well, not as big as the S&P, I would say, but still a breakout nonetheless. And if we were to go to the upside, again, more so basically going to be stagnant within range, and I'll give that range soon, but it would have to pass the downward trend resistance line. Then to the moving average has to pass, mind you, close at $450.41. So the moving average is about $454, give or take, and some change. It's showing $453.99, but by the time we get to it, if we're moving up, it's going to move up as well. So I'd say 454 and some change. And then the next levels, you could argue 457 and all that stuff, but ultimately getting to the $461 and some change. Now, if it gets extremely optimistic to the upside, the market's anticipating amazing inflation numbers for the next trading day, which basically would solidify that the Feds are going to cut interest rates on September, which pretty much the market is already expecting that for the case to be. So I don't expect the run-up to be this crazy, but it'll be more prevalent to go to this levels where we see a lot of resistance and so on and so forth to the $465 and some change. I don't necessarily see that happening. I think more of the staying in the zone of 454 and some change, give or take, and then potentially coming down to this range right about here. So this level right now is 448 and some change. For the S&P, I should probably state it too, is about 531 and some change, by the way, in case for the ones that I wanted to see for the S&P. But it would come down to this moving average zone, which is pretty much about $443 and some change, which coincidentally goes where this drop is earlier back in May of 2024. So pretty much it almost looks like $443 and some change would hold. Could it go lower? Obviously it can. I don't expect some crazy moves unless more closer to the end of the trading day for anticipation for the inflation numbers. But the thing is, though, I don't think the markets will be reacting too much to the upside and downside for Monday for anticipation for the inflation numbers, because again, the market is expecting a rate cut for September unless the numbers come in way worse than expected and inflation is actually somehow skyrocketing, right? So if that is the case, then markets, in my opinion, would react negatively to it, and we would come down to this level that previously we've got it down to is about $433 and some change. But it's in essence, though, when we got into this range, it's pretty much a channel range. So we go from 433 all the way to $478 and some change, give or take. So basically come down, bounce to support, resistance, support, so on and so forth, right? But yeah, 433 and some change. Can we go lower? Can we go higher? Obviously, I don't think the other levels will be in play until Tuesday, Wednesday trading day. So until then, I'll cover those ones. And then for the Dow Jones, a little bit more easier to predict, I would say, for this one. Basically, this is upward trend resistance line dating back since 2021, upward trend support level dating back since April of 2024. Stayed within this range, obviously breakouts and all that stuff, but showing the same thing, right? Not much of an upside, not much of a downside, because the MAC lines are conflicting up and down kind of stuff, just like the previous trading day or for Friday's trading day. We closed at 39,497 points. And essentially, if we go to the upside, from the ranges I measured, here's the moving average first. I'll give the moving average. So essentially almost going to be 40,000 by the time we get to it. So if we go up to the upside, more so 40,000. But then you could say that we're going to be between 39,900. And the way I'm getting that is basically from the horizontal resistance right about here, crossing this way, quick drawing 1, 2, touch points, 3, 4, support, touch point, resistance, touch point, so on and so forth. So that's about 39,900. And then to the upper side, looking at pretty much almost 40,100 points, give or take. More so, not necessarily getting to the 40,100 points, but almost getting to it, because based off this resistance right about here. But we'll see. And then the gap down previously. So basically about 40,000 100 points, give or take. Now to the downside, if it comes down, basically we're expecting this upward trend support level to hold, like we've seen multiple times dating back all the way since April 2024. And then I pretty much could see it dropping down decent amount, basically, for the most part. First levels of dropping down would be about 38,900 points, and then coming down to this upward trend support level, which is about 38,600 points, give or take. But yeah, so that's basically it. More so waiting for Tuesday and Wednesday inflation numbers to see the direction of the market, if it will be going up or down. I don't expect anything crazy because, again, the market's expecting already a rate cut for September, but we'll see. That's it for today's video. If you found it beneficial, consider dropping a like. It does help the channel, so thank you so much for that. I do appreciate it. And if you guys want to be notified when I upload my next video, consider subscribing, following, so be notified when I do upload my next video. Thanks again for watching. Take care. God bless and peace.